Holy flippity flip flop flap and smokes, everyone. It has officially begun. The bear market is here. The Nasdaq is down 20%. This is the crisis I've been trying to warn about and beg people to listen about, but they didn't listen. They just laughed at me, called me a fool, but now it is too late. Ladies and gentlemen, we have so much news about what is happening in the markets right now. I've got so much indicators to tell us exactly what is happening, what is going to happen, and if it's going to get worse. Because guess what? Investors are still completely delusional to the situation we're in right now. They are still in denial and think, don't worry, it'll just skyrocket back to all-time highs next month, next year, like it has over this past 14-year bull run. So is this the bottom? Is now the time to buy? And will the markets recover anytime soon? Let's have a look. Well, look at this, everyone. Dow drops nearly 800 points as market turmoil continues from Russia-Ukraine war and inflation fears. Now, we did see the market try to recover last week in some recent rallies, but people, I was trying to warn you to say this is just a dead cat bounce. This is a sucker's rally. Don't buy now. The bottom's not in yet. And people, look at this. The Nasdaq is now down officially 20%. We're officially in a bear market for the Nasdaq and the Russell 2000. And you know what's funny? I still have people dropping comments saying, where's the crash? There's no crash coming. And you still have these dip buyers that have been buying every dip, catching falling knives, and pretty much buying the dip that turns into a 50-layer dip. And when the real crash comes, when the real opportunity comes, they're not going to have any cash to put into the markets. But don't worry, you, my viewers, I'm sure you've been stockpiling cash and there'll be some great opportunities for you coming ahead. Look at this, the S&P down nearly 3% today as well. But again, what exactly is it that caused this crash today? Well, this, everyone. Oil traders are betting prices may pass $200 a barrel this month. This is why we need to pay attention to what's happening with oil, because I see many stock gurus that don't really pay attention to commodities or the macroeconomic picture. But look at this chart. This tells us exactly what we are heading for. Look at this. A surge in energy prices suggests high probability of recession. Every time it goes above the 50 level, we can see in 1970, 75, 80, 90, 2000, and 2008, we see the economy fall into recession. And the reason behind this is because if consumers have to put all their money on fuel, food, housing, and they don't have money to spend in the real economy or on discretionary items, then that is going to have a huge drag on economic growth. And all these companies that rely on consumer spending, they're going to get hit, and they're going to get hit hard, because the US economy relies up to 70% of US consumer spending for GDP. And last night, this happened. Overnight on Sunday, US oil prices hit their highest level since 2008, amid an ongoing war between Russia and Ukraine. West Texas Intermediate crude futures, the US oil benchmark, hit 130 per barrel at one point before pulling back. WTI crude were last up about 3.5%, around 119 per barrel. International benchmark Brent crude spiked to 139 per barrel, its highest since July 2008. And what this means for the markets is this is going to be more inflationary pressures on the CPI. We're going to see higher inflation, and that means the Federal Reserve is going to have to get much more aggressive with lifting interest rates, much more than what they're saying of 2 or 3%. And you know what's really funny? You can think of it like this. Say, for example, there's a big bushfire or jungle fire. What the Federal Reserve is doing right now with their 0.25% interest rate hikes is like taking a bucket of water and throwing it on a bushfire. It is absolutely going to do nothing to stop the raging inflation we have right now. Because look at this, crude oil is up 84% year over year. Natural gas is up 80%. Heating oil 106%. Coal 377%. And look what's happening in Europe right now. This is going to cause a devastating recession in Europe. TTF gas in Europe is up 1,300%. That's right, 1,300% in a year. UK gas prices are up 1,100%. And look, they're up around 160 and 190% just in the past month. Also, what's going to add to more food price inflation is wheat. Wheat is up 93% over the past year, 61% just in the past month. Hello people, are you starting to see how bad the situation is we're in right now? Do you think this inflation is going to go away with these 0.25% rate hikes? Do you really believe the Federal Reserve when they say they're only going to need to do 4 or 5 rate hikes? Heck no. But now there are some new developments coming out right now that could make this inflation crisis and this market crisis even worse. Listen to this. Secretary of State Anthony Blinken said Sunday that the US and its allies are considering banning Russian oil and natural gas imports in response to the country's attack on Ukraine. So we're seeing oil nearly at $150 per barrel, and the US hasn't even put a ban on Russia imports. So if they do this and Europe does this, I hope you're getting ready for $10 gas, and in Australia, I hope you're getting ready for $3 petrol. And so what all this is leading to? Stagflation. The equity market is wrestling with large commodity supply shock, including notably oil prices, and concerned that this could be morphing into a stagflationary shock instead of just an inflation shock. Forecasters expect the US will grow more slowly with higher inflation, Europe's economy will toggle near recession, and Russia's GDP will experience a double-digit decline amid the geopolitical conflict. And for all my crypto investors, we're seeing more weakness in Bitcoin. It has fallen down to a low of around $37,100. And this is why I tried to warn you after the short squeeze where it skyrocketed up to 44,000. Do not FOMO in. It is just a short squeeze. There is nothing fundamental that has happened with the cryptocurrency markets or the cycle pattern. But what's happening with inflation and oil isn't the only indicator. I now have one of the most reliable indicators of all why we're going to enter into recession and these markets aren't going to recover anytime soon. That is the 10-year and the 2-year US Treasury yield curve. Now, the yield curve inverted in 2019, right before we saw one of the worst recessions in 2020. And look at this, everyone. Over the past year, we can see the yield curve starting to flatten. That's the difference between the 2-year Treasury yield and the 10-year Treasury. We can see it was around 1.5, 1.6% in April 2021, but it's been falling and falling and falling, and we've just hit a new low. The 10 and the 2-year Treasury yield spread is now only 0.24%. So it's getting very close to flattening, and once it inverts, this is going to be pretty much the strongest signal we have that a recession is imminent. Just like I've been warning about, like Elon Musk is warning about, now even Permabull Cathie Wood is warning about as well. So you're probably thinking, okay, looks like we're pretty much doomed here. So what can we do to protect ourselves? Again, like I've been saying, people, you want to protect yourself, get some gold. Look at this, gold bugs. We did it. We made it. Gold price rises above 2,000 as the situation with Russia and Ukraine has boosted haven demand. So look at this. Gold is up 18% year over year while the markets are down 10%. This is why you always need a little bit of gold in your portfolio as insurance for when the real crisis begins. And again, I was telling people when it was around $1,750, $1,800 an ounce, buy now while there's still euphoria in the markets. You don't want to FOMO into gold once the real crisis begins because it'll be too late. You always want to be doing opposite of what the market and the herd is doing. And you know what I'm going to be doing when the S&P falls 20 or 30% and there's blood on the streets and people are leaving the markets, people are heading for the hills? Well, then that's when I'll start coming in, dollar cost averaging, and again, doing the opposite of what the market will be doing. But we'll have to continue and monitor the situation because who knows if things get worse, if inflation gets much worse, if we have to get a Paul Volcker moment and lift interest rates up to 10%, well, this market crash should become much, much worse than a 30% drop. So everyone, that is just a quick urgent update of what's happening in the markets right now, but what do you think will happen? Let me know. Now, for all my loyal viewers and subscribers still watching, you're awesome. If you want to get up to 5 free stocks with Moomoo and a guaranteed stock of NEO, I'll put a link in the description. Thanks for watching. I'll see you in the next video.